The whole of last week, we defended ourselves pretty well. I think in most of the days we opened lower during the last week, and we end up recovering from the lows. And this was quite visible here. I mean, in every opening day, we were opening lower, and then we recovered and closed higher. On Friday, we opened higher, and then we dipped post RBA policy. Although RBA policy was macro wise good, but still we dipped, and we closed finally little on the negative side, despite the kind of news flow that we had from RBI plus the government both. I think we should have, in a normal market scenario, we would have been at least up by 7 to 800 points in a one day itself, but we end up closing around 50-60 points lower. It's because the market right now is looking at these macro events with a view that all these measures, whatever has been taken, will take time to start delivering results. For example, I just take you through some of the points. The first is RBI said that okay, they kept the rate unchanged, and in fact, even the inflation figures that they're given have been little lower than the anticipation. So, market should have been taken it with quite a positive view. The same time, government announced the news that through ordinance they are making now investment in government bonds tax free for the FIIs. So very positive for the bond market, and it also pushed up the rupee as well against dollar. So it should have been a very positive news. Rupee recovered. Rupee went up by around 80-90 paisa. It recovered, which is a big number for a currency. However, the market failed to enthuse because it's not that that government announced today and tomorrow onwards the FIs will start buying the government bonds. FIs will buy the government bonds if they think the macro of the country of India is conducive enough to put some capital over there. And yes, tax rebates is like a cherry on the icing cake, like a cherry on the cake. Sorry. So in this context, I think the market did not deliver the outcome as expected. Another problem that came during the weekend is, the way US markets collapsed on Friday. It was purely based upon, the AI stocks. I think the bubble in the AI stocks seems to be getting, if I may say, getting pricked, or I would say the game is getting quite dangerous as it goes up. Like on Friday, the Nasdaq index was down more than 5%, approximately. S&P 500, very well diversified index, was down 2.5-3%. Dow was down 1.5-2%. So all the the entire US sector was down. There's one index over there. I just trying to recall is index for semiconductor stock, which is nothing but a direct proxy to AI theme. It was down around 10%, So this is the kind of fall that US saw. And on the top of it, one more bear hug that markets are getting today is that the escalations between US and Iran. They continue to hit each other a little bit, this whole weekend. And even just a while back, the news came that Israel has hit on certain targets in Iran. Military targets in Iran. So that means the ceasefire is now out of the window. The fight resumes from today onwards, and that has seen a spike in the crude oil prices again. So all these factors are quite precarious, quite negative, and that's why now the Nikkei is somehow down around 3.5-4% at the moment. Kospi opened at a lower circuit today, and today right now also it is trading, I think, close to 8-9% only, if I'm not mistaken. Right now, yeah, it's 7% right now. Nikkei is down 4% now. The Dow is now, which is also a non-negative. GIFT Nifty is down around 350 points approximately. So that means if I just sum it up everything for you guys, we are going to open somehow in this range. I'll show you a range. in this range now, so if you see, we are moving from this block to this block to this block, and now we are in this block, and this blocks, in my view, we have a line at 22,900 where it is has its own low. Now this low, I think if it has to touch, it will touch by tomorrow, because today it is like to open around 23,000 odd levels, around levels. And if there's further bad news coming up from US market somehow, then in that case we see it going further down tomorrow, economic expiry, to this level, and may show a kind of rebound from there. So bears have a complete command on this narrative right the moment. So with this kind of news flow, I think they'll further pounce upon this news and go down. Now, as a trader, to look whether this holds true or not. So that's why I'll now remove the other lines which is there. Now, if double to 900 breaks for any reason, we may actually then probably try to settle in around the levels of 22350. This is where we're going to basically settle now. So with this kind of scenario, it is better that we take a sell on rise stance only. One more line, if you see, we're getting from is called a lower low. So this is where it's going, and if this is any indication of the same, we are likely to open in this range of 23,100, I believe so. And from there, we probably start to see some recovery and see whether we are able to close about 23250 or not. So quite a bad scenario for bulls, quite a attractive scenario for bears. But that's what Nifty says on the hourly chart. On the daily chart, well, we almost defended our territory of 23350 on Friday. We definitely going to open somewhere here, sorry, not here, like somewhere here, and let's see where we close. If we close in the range of the kind of bad news for 250 से अगर हमने above भी close किया, so that would be as good as 22,350 only. So if we close about 23250, I think it's a win. If we close around 23,000, we are in distress. Close at 22,900, well, the game is over for bulls for some time. So this is how the right now news are flowing. On the weekly chart, we broke below 23500 again, which is a negative scenario. So hourly negative, weekly negative, daily is neutral. So that means we are negative now. The possible targets is 22,900 and then 22,300 at the moment. These are two targets you're looking at if things remain like this. Recovery ka possibility is one when it starts going above 23200. That's first target. Next is 23600. So this week will be a volatile week. For today's, somebody is already on the sell side, can have their stop loss partial booking, if I say, not solid partial booking, somewhere in the range of 23250 if it recovers from there and starts trading above that level. If it is not, keep your shorts open. Let's see where this war heads to. Second scenario is for the bulls is that if we go towards in the range of 22800 to 22900, we can attempt long trade with a clear stop loss of 100 points. That's what I feel. I could be wrong, but that's my view. Still, you can look at your own risk appetite. Second scenario could be that if markets trade to about 23250 and persist, in that case I think a long can still be attempted. The Nifty may probably then go and try to conquer 22350 and above. So this is how we should probably anticipate today's trade. The derivatives, the options data, if we see, the options data indicates that this is a range. This range is basically, if I say, is from 22700 to 23,000. This is where the writing is happening. We are definitely breaking this level, so this is all gone. This is where now the action would happen, and this call writers will probably now move to 33300 and could be above. Let's see where they start making those walls. The red walls, right? The red ones where they start to emerge. This will go high. This should go high. This should go high. This should go high. So this is how the trade is going to happen. With this, I think we are clear now that the support lies at 22,900, a good support. The reversal will start to happen or attempt to happen after 33250 and above. And for the bears, let's hope for them that even 22900 goes away, so that we head towards 22300. With this, thank you very much. Have a good trading day.